Ready to make your money make a difference. Today, we're taking a deep dive into sustainable investing. And trust me, this is way more exciting than it might sound.
It really is. It's incredible to see how many people want their investments to reflect their values and contribute to a better world.
Absolutely. And we're not just talking about warm and fuzzy feelings here. We're getting into the nitty-gritty with the 10 principles of sustainable investing, how to invest and do good. This book is like our roadmap for the day.
It's packed with practical advice and really breaks down how to align your investments with your values.
So principle number 1 jumps right into ESG criteria. I hear ESG everywhere these days, but honestly, it can sound a bit like alphabet soup. Can you break it down for us? What's ESG all about in plain English?
Sure, think of ESG, which stands for Environmental, Social, and Governance, as a three-pronged filter for your investments. It's basically a way to assess a company's impact on the world, going beyond just the financial numbers.
Okay, so it's about looking beyond the surface, kind of like giving a used car a thorough inspection before you buy it, right?
Precisely, you got it. Let's start with the E, the environmental factor. This delves into things like a company's carbon footprint, their waste management, how they use resources. It's about understanding their impact on the planet. Are they trying to minimize their footprint? So a company heavily invested in, say, fossil fuels, that might raise a red flag, right? Whereas a company pioneering renewable energy solutions would be like, okay, they're on the right track.
Makes sense. It's not just about planting a few trees for good PR anymore, huh? So what about the S, the social aspect? What does that entail?
Yeah, so the S is all about how a company treats its employees, their supply chain, even the communities where they operate. Are they paying fair wages? Are they promoting diversity and inclusion? Do they uphold human rights throughout their operations? These are crucial questions.
It's about walking the talk, not just talking the talk.
Got it.
Now, G, governance. This one always sounds a bit intimidating to me. What's the deal with governance?
It might sound complex, but it's actually quite straightforward. Governance is all about a company's leadership, their ethics, how they handle things like executive pay, transparency, shareholder rights. Basically, it's asking, is this company being run responsibly and ethically?
Okay, so imagine a company constantly embroiled in scandals or known for shady business practices. Their governance would probably get a failing grade, right?
Exactly. You'd be right to be wary. Just like you'd scrutinize a company's financial health, you want to understand their ESG performance. They're all interconnected.
It's about aligning your investments with your values, and I think that's something a lot of people are looking for these days. So we've covered ESG criteria, our compass for responsible investing. Let's move on to principle number 2, sustainable funds. This sounds like teamwork for investors, am I right?
100%. You're right on the money with that analogy.
So instead of going it alone, you're pooling your resources with other investors who share your values.
Exactly. Think of it this way. You want to invest in companies that align with your values, but you don't necessarily have the time or expertise to research hundreds of individual stocks. That's where sustainable funds, or ETFs, which are exchange-traded funds, come in. They pool money from many investors and invest in a basket of companies that meet specific ESG criteria.
Okay, so it's like having a professional team of analysts doing the research and picking the right stocks for you. That sounds, well, a lot less stressful. But wouldn't that also mean giving up some control over exactly where your money goes?
That's a valid concern, and that's why choosing the right fund and understanding its investment strategy is absolutely crucial. You can find funds that align with your specific priorities, whether it's renewable energy, or maybe you're passionate about social justice, or you want a broader ESG focus. There's a fund out there for you.
So it's like choosing your teammates based on their strengths and your shared goals. I like that. Speaking of things I like, principle number 3 is near and dear to my heart. Renewable energy.
And potentially to your portfolio's growth as well, right? The world is shifting towards cleaner energy, and it's gaining some serious momentum.
It's not just about saving the planet anymore. It's becoming a really smart financial move.
It absolutely is. In fact, the 10 principles even highlights how the demand for renewable energy will continue to increase. And it's not just talk. The International Energy Agency predicts that renewables will dominate global energy investment for the foreseeable future.
So how can investors tap into this renewable energy boom? Now, you're big on putting your money where your mouth is. I think you even have solar panels on your roof, right?
Guilty as charged. But it's not just about individual actions like that. Investors can look at companies involved in the entire renewable energy ecosystem. We're talking about everything from, manufacturing solar panels and wind turbines to those developing those cutting-edge energy storage solutions, or even like pioneering new forms of renewable energy altogether. It's a rapidly evolving space. There's a ton of potential there.
Definitely an area to watch and maybe invest in.
Uh-huh.
Okay, on to principle number 4. And this one is a classic. Diversification. It's investing 101, right? But how does it apply to sustainable investing specifically?
It's even more crucial in sustainable investing, actually. Think about it this way. You wouldn't put all your eggs in one basket.
Right.
Same goes for your investments. You don't want to put all your sustainable investments in, say, just renewable energy.
Right, so it's about spreading the love and the risk across different areas within the sustainable investing world. Gotcha.
Exactly. The book even talks about diversifying across different sustainable industries. You could explore companies tackling sustainable agriculture, for example, or developing green building materials, or even those revolutionizing, waste management and recycling. There are so many options.
It's like building a diversified, sustainable city, but instead of bricks and mortar, it's your investment portfolio. I like the sound of that. Okay, principle number 5 is all about transparency, and I feel like this is especially important in an area like sustainable investing. There's a lot of buzz, right? How do you cut through the noise and make sure you're not falling for greenwashing?
It's a great point. Unfortunately, there are companies out there that want to appear more environmentally or socially responsible than they actually are. It's all about appearances for them.
Like putting lipstick on a pig, as
Yeah.
they say. So how can investors tell the real deal from the greenwashing hype?
It takes a little work, I'm not going to lie. You have to do your research. The 10 Principles mentions ESG analysis platforms. There are websites and resources dedicated to ESG ratings, for instance. Or you can look at reports from reputable organizations, the ones that really scrutinize corporate practices. And you can always just dig into a company's own sustainability reports, see what they have to say.
So knowledge is power. It's
Yeah.
about being an informed investor, not just taking things at face value.
100%. Don't be afraid to, ask those tough questions. Look
Yeah.
beyond glossy brochures and fancy marketing campaigns. Make sure their actions actually match their words.
I'm ready to put on my detective hat.
Yeah.
All right, principle number 6 brings us to the circular economy. I'll admit, I'm not entirely sure what that means. Can you break it down for us?
Of course. It's a super interesting concept, really. So imagine a world where instead of our traditional linear model of take, make, waste, we shift to a closed loop where resources are constantly reused, repurposed, or recycled.
So less of a one-way street and more of a continuous loop.
Exactly, you got it. The circular economy is all about, minimizing waste, right? Reducing our reliance on virgin resources, and ultimately decoupling economic growth from environmental degradation. It's a big idea.
It sounds like it. Do you have any real-world examples of what this circular economy looks like in action?
Sure. Think about companies that offer clothing rental services, like Rent the Runway, for example, or businesses that have figured out how to repurpose food waste into, say, animal feed or compost.
So good for the planet and potentially good for business too. Now that's what I call a win-win. And speaking of making a positive impact, principle number 7 brings us to impact investing. I feel like this is at the heart of what we're talking about today, wouldn't you say?
Absolutely. It's taking those values-based investments to the next level, for sure. You see, while ESG is more about mitigating harm within a company's existing operations, right? Impact investing is about actively seeking out investments that are designed to have a measurable, positive social or environmental impact alongside that financial return.
So it's not just about avoiding harm. It's about actively doing good in the world.
Precisely. It's about investing with intention. You're putting your money into things like renewable energy, affordable housing, sustainable agriculture, or maybe, increasing access to clean water. It's all about making a tangible difference.
It's about putting your money where your values are, literally. Do you have any examples of successful impact investments that come to mind? Something that our listeners could relate to?
Of course. Imagine, for example, investing in a company that's developing those affordable and energy-efficient water filtration systems. The time that could provide clean drinking water to communities that desperately need it. That's an investment with the potential to generate both financial returns and a really profound social impact at the same time.
Now that's what I call putting your money to good use. Okay, principle number 8. Green and social bonds. I'll be honest, I've always found bonds to be a bit, let's just say dry as an investment topic. Convince me why I should be excited about these green and social bonds.
Don't let the name fool you. Green and social bonds are anything but boring, I promise. Basically, they're fixed income securities just like regular bonds. But here's the cool part. The funds raised through those bonds, they're specifically used to finance projects that have positive environmental and social outcomes.
So it's like you're loaning money for a good cause, but with the potential for a return on your investment down the line.
You got it. It's a win-win. For example, green bonds might be issued to fund, let's say, renewable energy projects, sustainable water management systems, or maybe even energy-efficient buildings. And then social bonds, on the other hand, those might finance things like affordable housing projects or initiatives that expand access to education or healthcare in underserved communities.
So you get to feel good about where your money is going, and you have the potential to earn a solid return at the same time. I like where this is going. But what about the returns themselves? Were you talking about sacrificing profits for principles here?
Not at all. In fact, the book even points out that green and social bonds often offer competitive, if not better, yields compared to traditional bonds.
Okay, so green and social bonds, they're not as dry as I thought. They sound like they could be a really interesting option for investors who are looking to align their portfolio with their values without, sacrificing returns. Now, speaking of taking the long view, principle number 9 is all about long-term vision. This feels especially relevant in the world of sustainable investing, don't you think?
Absolutely. Sustainable investing is inherently a long game. It's about investing in those companies and projects that are building a more, sustainable and equitable future for everyone, even if we don't see the full impact of their work for years to come.
So patience is key here, more so than in traditional investing, perhaps.
It's essential. You have to realize the companies and projects that are at the forefront of sustainability, they're often challenging the status quo, right? They're developing those innovative solutions and creating new markets, and that kind of groundbreaking work, it takes time. And it requires investors who share that long-term vision and commitment.
It's about playing the long game, not just chasing those quick profits.
Yeah.
And I think that resonates with a lot of people, especially now. Okay, we've made it to our 10th and final principle, responsible innovation. It sounds pretty awesome, to be honest.
It really is. It's one of my favorite principles, actually. Responsible innovation is all about supporting those companies that are harnessing the power of technology and innovation. But they're doing it to develop solutions to the world's most pressing social and environmental challenges.
So we're talking about companies that are genuinely trying to make the world a better place, not just trying to, make a quick buck. They're in it for the right reasons.
Exactly. It's about advancements in, everything from clean energy and sustainable agriculture to those circular economy solutions we were talking about, or even breakthroughs in healthcare and education, all driven by that commitment to responsible innovation. It's inspiring stuff.
It's like investing in the future we want to see, not the one we're trying to move away from. It's exciting. Do you have any examples of companies that really embody this principle of responsible innovation in action?
Oh, tons. There are so many out there now. But one that comes to mind is this company that's developing plant-based alternatives to meat. They're tackling so many issues at once. Climate change, improving human health, even revolutionizing the food industry as we know it. That's responsible innovation in action.
It's amazing to see how much innovation is happening in this space.
Yeah.
It feels like we've covered a ton today. ESG criteria, the circular economy, impact investing, even those plant-based burgers. It's a lot to take in.
It really is. And we've just scratched the surface, to be honest. There's so much more to explore in the world of sustainable investing. It's a constantly evolving landscape, which makes it even more exciting, right? New opportunities popping up all the time.
It's definitely inspiring to know that we can align our investments with our values and really be a part of something bigger. So, as we wrap up our deep dive, what's the key takeaway you want to leave our listeners with today?
I think the most important thing to remember is that your money has power. It really does. And by understanding those 10 principles, really understanding them, you're empowered to make those informed decisions, the kind of decisions that support companies that are making a positive impact. You can be an active participant in shaping a more sustainable and equitable future. It's in your hands.
Beautifully said.
Yeah.
It's not just about making a profit, it's about making a difference. That's it for today's deep dive into sustainable investing. We'll see you next time.